Hello and good morning to everyone. Welcome to Behind the Markets, the social media edition. No, just welcome to Behind the Markets. We have kicked off and we are ready to get started. Vernon will be joining me anytime soon at this point. So welcome to all. It is Wednesday this Thursday where we do usually go through entrepreneurship, but today we are still on our journey where we will be going through the wealth matrix or the investing matrix, especially towards the end, and what that end journey should be looking like for a person to get to that stage of financial independence, let alone financial freedom. But first things first, we like to break through the market and see how markets are performing this morning. And data coming out of markets is actually showing us that there is a little bit of data. There is still that continuous slide of the kwacha. It is actually getting very deathly close to 19 kwacha per dollar. It's at 18.5, and this is pretty much eating to whatever gains this current administration has had. So it is a confidence indicator, unfortunately, while there is that temporary sell-off of the currency until mid-February. But it does look like we are probably heading back as close towards 19, and possibly, if we continue this momentum, even heading towards 20. Year to date, the kwacha has lost 4.16%. Sorry, the dollar has risen by 4.16%, with 1.67% up on the week and 4.88% up on the month. Now, even on the year, if we're actually looking back at this from the end of last year, we actually are also seeing that we do have a dollar that is up. Just to get that correctly, we do have a dollar that has a zero net gain. Okay, so we are pretty much where we were at the beginning of last year, or towards this point of last year, because we were in a horrible sell-off around this point. Now, going into the rand, we did see that the rand moved up by about 1.04% as well. Sorry, going back to the dollar, we have seen that the acceleration of the losses are also continuing. We are on the 78th day of loss, and we are currently at a 52-week high. Just also to put this as well, we are on a 52-week high of the dollar itself. So it actually is trading quite strong. Signals are still saying that the dollar is currently on a hold pattern and still oversold. It's overbought. So we do have overbought dollars in the system. So one has to be very careful to go in there to try and get rich on the dollar now. Simply because this is overbought territory. Now, going into the rand, we're seeing that yesterday, we did go off from the day where we did have a zero movement on the rand. Now we are on not a 52-week high, but rather close to it. We're 61% up between the highs and the lows. So we are heading towards the upper side of things, and we are seeing a little bit of pressure building up. But the rand is still in the selling pattern. Still, it's not starting to signal sell at this point, while there is buying momentum. So selling directionality and buying momentum are starting to dictate what is happening within the rand itself. Now, going into our bond market, we did see that yesterday. Government bonds, secondary traded government bonds, were currently holding at about 96.24, up 0.9%, and on year to date, up 2.17%. So this is above what the expectation of this month's inflation will probably be. So this is actually good in terms of trading of secondary market government bonds. We do see on the month they're up 2.65%. So this month has been with 1 week of trading up. With 1 week of trading up 0.97%. So we are in a relatively strong position with the government bond market, or the secondary traded government bond market. We have been joined by Vernon. Thank you very much for being with us, Vernon, as we are running through the markets this morning. Also coming in is the GRZ bond market in US dollars. USD GRZ secondary traded market in US dollars down 0.34% and down 1.92% year to date since January. So we have been on a continuous slide, 2 days consecutive down with 20 days consecutive up. Now the kwacha is buying and continuously, the kwacha bond index is buying and continuously buying, while the US dollar one is selling and seemingly oversold. So we are seeing a quite a treacherous position. Interest rates came down yesterday, signaling buying again, still happening on the secondary market. While we have seen interest rates down 0.24%, it has been a one day movement, and there is not much happening there. And finally, commodities markets. We are seeing in the commodities sector, copper is up 0.19% as of yesterday, up on year to date 11.46%, signaling industrial growth is still picking up this year. While we are seeing oil up 0.6%, 0.06% as of yesterday, with 0.31% year to date. So oil has had a bit of a flat movement, and gold, on fears of recession coming out and corporate earnings starting to come in a little bit weak, gold is trading at about 0.6% up in US dollars, up 6.37% year to date. And in Kwacha, gold is up just on this month alone 10.8%, up 0.8%. So we've seen that the wealth, the what we call the wealth insurance assets are doing relatively well, because we are in a bit of a defensive posture. High risk Kwacha, bit of a dodgy situation in terms of our economy right now, and also we're seeing that the global economy is starting to show staggering signs. Signals that we're seeing from the global economy quickly is that interest rates are expected to come in smaller. Traders are betting that the U.S. Federal Reserve will soon tone down its aggressive rate hike policy and get a lift after Canada on Wednesday became the first major central bank to say it would likely hold off on further increases on the interest rate for now. So we're starting to get signals that a lot of central banks have finally gotten through to the pressure of potential recession fears. Investors are also going to keep attention to the Bank of England and the European Central Bank, who are due to meet next week. And also the futures market is pricing in the probability, a 94.7 probability, that the US Central Bank will only raise interest rates by 0.25%. In the two-day meeting that will start on the 1st of February, which is exactly next week. What that is signaling, remember that people, our interest rates in a country is the US or the global interest rates or the LIBOR rates plus the risk premium that we're dealing with. So if we're seeing potentials that this hiking of this interest rate is going to start slowing down, then that there's going to be a neutrality point, a turning point, and a downward point. So in the future, we're starting to see that probably people will start prepping funds to start going into the emerging markets. But for now, they're still keeping it on the down low. Other data that we're seeing in terms of global economic growth, we're seeing that Boeing on Wednesday reported wider losses for 2022 on weakness of its defense unit, and it warned of further supply chain issues with the U.S. plane maker missing Wall Street expectations. Now, Boeing is a strong signal for the U.S. economy and the global economy. So also it does have its own idiosyncratic problems of poor management. But just generally, Boeing is basically a signal for how strong the U.S. economy is doing. For it to be registering wider losses than expected is a signal to how the economy is doing. Simultaneously, Microsoft warned its customers were cautious about spending on in an uncertain economy and lackluster gains. And also, there has been a study that was done very recently. Let me just pick this data up. That was done by Allianz that was talking about the fact that 2 out of every 3 Americans are cautious about spending in this economy, and more cautious about spending than worrying about their financial future, which means the U.S. consumer, who's the backbone of their economy, is having problems. Global equities markets skipped on Wednesday as poor corporate results fueled recession fears, as did the ongoing inversion of the short and long treasuries yield curve. So they're strong indicators that a U.S. recession is on the horizon. Poor corporate earnings mixed with a yield curve inversion. And we haven't seen potential slowdowns in the labor market, and a Federal Reserve who might. I don't think they're going to go 0.25 basis points. I think they still think inflation is the enemy, and they are going to go hard at inflation. So that's some of the data that we're seeing on the U.S. markets. Now, finally, before we transition into the economic calendar. Sorry, my brain was trying to do a transition there, and I think it got caught in the back foot. Going into the economic calendar from yesterday and the data that we picked up, being midweek. Remember that this week we're still waiting for U.S. economic data. It is still Chinese Lunar New Year. PPI data came out of England. And we did see producer price index data showing that the inflation of producer prices is up 12.4% year on year, but only 0.1% month on month, meaning inflation in supply chains is starting to slow down. Input prices are starting to come down in Europe, in England, while also output prices are actually going negative. So England is showing negative signs that inflation is deeply starting to slow down. Business expectations are up in Germany, and current assessments of the environment are actually still down. So it's still a negative environment for Germany. Simultaneously, we're also seeing that the MBA purchasing index in the USA is also up. So positivity. So mortgage-backed assets are up. Mortgage interest rates, I think that one is of interest to all of us, have gone down from 6.23% to 6.2%. So downward movements in mortgage interest rates are signals. While Canada has pushed up interest rates by 0.25%, while they're saying they're going to hold off on further interest rate hikes. So we are seeing the story of the fact that inflation is slowing down and interest rates are picking up, but income is still touch and go. So today, the information that we're expecting to get is one, Zambia is expecting its inflation data and its trade data. It's end of year trade data this year with inflation data for this year as well. And we'll probably be picking up on and our inflation data. So expectations obviously is that we probably will be seeing inflation continue around the bend, but there is a probable chance that we might actually break through 10%. There has been a little bit of price hiking. What people also don't recognize is the seasonality of maize. Around November, December, January, February, what also hikes the prices is the fact that we have no maize on the market. And therefore, no maize on the market means higher maize prices. Higher maize prices means higher milling meal prices temporarily. And then when the off season kicks in, when the harvest season kicks in, maize prices start to plummet down because we're now getting our reeds and people start to push the prices down so that they're not holding excess stock. So our CPI data will probably bounce up. Remember that January is usually the most inflationary month of the year, according to the last 10 years that my firm has been studying. We've been able to see that. We're also waiting for PPI data from South Africa. Remember that we import from South African factories. So what is their inflation rate? Is expected to be 14.1%, 0.4% year to year. With a stronger rand, that's going to also put a little bit of inflationary pressure. While the South African Reserve Bank is expected to raise interest rates by 0.5% today. They are expected to continue their rate hiking cycle until 2024. US GDP data is expected to start coming out today as well. So we'll be looking out for that, with treasury auctions expected to come out and federal tax revenue coming out from countries like Brazil, and mainly CPI data coming out of Tokyo. That's a big one for Japan. Will we be continuously be seeing that? Because those are signals that this Japanese central bank will continue to hold interest rates very still. And finally, Vernon, looking into the latest global news before we get into today's story and before we get into today's major outlook. I don't know if there are any other issues that we're going to be looking at today. If there are any other issues that we will be looking at today, but the major stories I think dominating the global headlines before we get back to the local. I remember that we always look at whatever headwinds are potentially coming in. It's mostly got to do with U.S. earnings. It is earnings season, and we're starting to get earnings data, and a lot of earnings data is concerning to the rest of the world. For example, the only shock I think for everyone is Nokia's quarterly profits in Stockholm actually beat expectations. Nokia, a dying company, actually had higher expectations than possible. Dubai lender Emirates NBD 2020 had a net profit up of 40%. So we're seeing around the global economy that a bit of this is only contained to the US. The dollar wobbles near an 8-month low ahead of the central bank meeting, which is happening on the 1st of February. So you are seeing that. And the Bank of Mexico should discuss decoupling from the US Fed. Now, this is interesting news, Vernon, because in addition to this, we did get news over the weekend, over last week, that Brazil and Argentina are starting to meet up in talks of actually creating a central currency for South America, because they want to maybe potentially rival the US dollar. So that's actually quite an interesting conversation that you're seeing there. And now you're talking about Mexico trying to decouple from the US. So this is actually a big thing. But biggest Facebook news that is basically tearing the woke liberals apart, which while we're trying to look at market data, is that Facebook has given Donald Trump his account back. Facebook Meta has officially reinstated Donald Trump's Facebook and Instagram account. So now that he's got his Twitter account back. So social media is interesting again. And therefore, we're back to being distracted by people tearing their heads up by stuff that Donald Trump says. But there is a funny law that actually is coming in when it comes to the future. U.S. lawmakers seek to repeal Joe Biden's solar tariff waiver. Okay, that he actually is going to say solar panels and solar power are going to get a waiver from any of his trade restrictions. And finally, strong U.S. economic growth expected in the fourth quarter. Outlook is darkening. So that is part of what's expecting. So what are our four horsemen saying for us in terms of the global economy? Inflation pressure coming down. Interest rates expected to slow down. Growth is shaky, but there are signs that it is positive. So it is scattered around, while industrial demand is still hanging in the balance. That, Vernon, is our mix. I don't know if we have that, Vernon, is our mix. I don't know if we have anything else to discuss going forward before we get into some of our major conversation outlooks. I will hand you the floor, my brother.
Thank you very much. I think it's just the idea that people have been having mixed feelings about the whole energy investment and foreign investors coming into Zambia, and just ideally, the visit by the IMF in Zambia, and just how much money it is promising to hand over to Zambia at the end of the day, and seeing how we're going to possibly channel the monies to grow and the debt restructuring. For me, my concern is, how we're going to get ourselves out of date. But then I'm thinking, with the IMF in Zambia, what will be their agenda? And I'm thinking we might actually get ourselves into more debt as much as we're trying to clear ourselves out of date. So that, of course, will be our concern, when it comes to the IMF's, and initially grow fight where we start on the, and we probably start it just basically also gives us more stamina, something that you talked about earlier this course of a week, where we have not only one, in this case we don't only have America or the IMF borrowing us money, but we also have China on the other end, which gives us at least more upper hand on the entire situation. But then if we will consistently continue to find ourselves in a state where we keep borrowing money from the IMF, and that for me tells that we might actually put ourselves in a corner as time goes by, because then we'll continue owing them money, giving them more authority or more momentum over the entire conversation, and that can actually not be very good for a country. And that's just where my thoughts are, at this particular time of the economy.
No, I get it, and I get where everybody's coming from. I think what everybody needs to look at, and never have I been a fan of these multinational or international institutions coming into your country. I always just have to bear in mind what the risks of mismanaging an economy is. I hope, Vernon, that after all of this, the Zambian people learn the dangers of populism. The danger of populism is an indebted government that always puts you here, making decisions at the top of government for the popularity of your society is always going to lead your government to spend money. Because the thing, Vernon, is nothing is more popular than dishing out free money and handing it out for no reason. Okay? Nothing is more popular. That's why people play lotteries. That's why people gamble so much, because nothing is more popular than free money. Problem is that we seem to have this issue of constantly loving free money as a country, and we need to stop that. So if we can learn that these are the results of the free money regime, possibly in the future we can learn to start containing our governments, and we can stop voting for people for milli meal and start voting for actual credible policy. Added to this, Vernon, in terms of the sentiments of the Zambian people, I want to share something which I picked up on yesterday. This is some interesting data about the New Deal administration's recent data. This is stuff collected by Afrobarometer, and this is the country's reading. And we'll go through some of the things to know today before we get into our main discussion on the wealth matrix. Vernon, looking at some of this, we've seen that 51% of the country is actually comfortable, that think that the country is going in the right direction. 46% of the country think the country is going in the wrong direction. And this speaks to the polarity of the situation. Now, this also signals that probably our president has lost a bit of support over the last year, and it is a strong signal. And Afrobarometer does do these research readings around the world, and I think they've got an office here. They do it in conjunction with the University of Zambia here. We went through about 1,200 Zambians, and I know the moment you mention the president, everyone starts questioning and say, "Where'd you get this from?" Because everybody's defensive. If you have better data, by all means, show it. They did make sure that they went to all 10 provinces and they did diversify this. But going through this, it does actually indicate something very interesting, that you are starting to see the split and the rift in the economy. So let's break down who is supporting the direction of the country and who is not. Well, it shows that 53% of urban Zambians think the country is going in the right direction, while 49% of rural Zambians. So you are seeing it slightly tilting towards urban. The number one group, Vernon, by the way, who actually are in support of the direction the country is going in is the college-educated Zambians, who really only make up about 15%, or the post-high school educated Zambians, who really only make up about 15% of the general population of this country, according to the 2020 labor force survey, which actually shows that about 85% of this country are below grade 12. But you are seeing that the post-grade 12, 74% of them believe the country is going in the right direction, while those with no education, only 40% of them believe. So it is appearing that this administration is tilting towards the educated opposed to the uneducated. Though, Vernon, I don't think people should aspire to be uneducated. I think that's for lack of sounding, who cares? I'm not even politically correct. It's not good to be uneducated, people. It's actually not good to be uneducated. So maybe if your government is not appealing to the uneducated, possibly that's a good thing. I'm just saying that if we're trying to eradicate being uneducated in a country, possibly it's a good thing that the government doesn't appeal to the uneducated. And I know people will say, no, but what about the grassroots? Those people don't want to stay there either, by the way. They would like to be educated too, and they would like to make money too. So maybe it's a good thing, because unfortunately, this is what developing a country usually does. Policies don't appeal to those who you're trying to change. Now, the next group of people who are also very much in support of the direction the country is going are the wealthy. 73% of those who have never lived in poverty are in support of the direction. People who live in low levels of poverty, 62% are happy with the direction of the country. Those who live in moderate poverty, 47% of them are happy with the direction the country is going in. And those who live in high poverty, 40%. So you can see that it's tilting towards. I know I know that our political rhetoric in this country is we must be quote unquote pro-poor. I always wonder about that term, Vernon. What does pro-poor mean? Okay, are you in favor of poverty? Okay, are you in favor of poverty that we are facing as a country? And you shouldn't be. I always say people who try and say we favor poverty, that's an interesting conversation. So you want me to stay poor? What, are you in government poor? Are you living poor in State House? Are you living poor in Parliament? No, you're not. So how are you pro-poor? My question is always this. You can be socialist or capitalist with your mouth. What matters to me, Vernon, is what you are with your pocket. Okay? If you are capitalist with your own money, meaning that you're all about saving and putting it together, growing your enterprise as a person, then you're a capitalist. I don't care what you say. And I've always seen in the political spectrums people who talk about, oh, we are pro-poor, we are grassroots, while the politicians are increasing their salaries. You know, that's not a sign of being pro-poor. Nothing is more pro-poor than people in the public sector taking a lower cut. I'm just saying. Now, what I'm trying to say is, yes, obviously the policies are appealing to the rich because they're more capitalist, less spending oriented, and more job creation driven. Also the people this administration appeals to is the younger people, 18 to 35 year olds. 53% of them are happy with the direction it's going, and also 52% of those who are 45. The people who are not happy with the way the country is going are the people who are 46 to 55. Only 42% of them are happy with the way the country is going. And finally, women seem to be more happy with the way the country is being run than men. 49% of men are happy with the direction of the country, while 53% of women are happy with the direction the country is going. So what are we seeing? Urban women, higher educated, younger, more younger, and wealthier. So those who have more money seem to be enjoying this. So you know what I say to people? Get money. That's my thing. You can fight about politics all you want. It's not going to change anything. But you know what you can do, Vernon? You can get money. You can get richer. You can figure out how to make more money and be the 73% who are and join that 73%. You can be part of the bit of 40%, or you can join the 73%. And let's talk about that on Money FM, how a person can do that with their money. But let's go on to some more data on this read. We are finding that the major issues that the Zambian people have with how the administration is running the economy, most important issues, number one is management of the economy. 43% find that important. 41% find management of healthcare important. And 36% find infrastructure and roads important. So the major issues are economic management, healthcare, and infrastructure. Now, if you're looking at this, I'm just going to give you a summary data here. 38% of the country think that the economy is in a good state, while 52% of the country think the economy is in a bad state. Okay, so that's what we're seeing as we're reading. And people who look at their own personal circumstances, 40% of the country believe their personal circumstances are good, while 48% of the country believe their personal circumstances are bad. Okay, so that's actually quite interesting that we're seeing that a lot of people think the country's in a bad state and they're also in a bad state. But let's take a look at what they're seeing over the next 12 months. 63% of the country, Vernon, believe the country is going to improve, believe the economic conditions of the country are going to improve over the next 12 months, while 23%, if I'm correct, sorry, not 23, 18% of the country believe that the economy is going to get worse. So there is optimism. That's actually quite interesting. The Zambian people are actually optimistic. Though the country is in a currently bad state, 63% of the country believe that it's going to get better, while only 18% is going to get worse, and the others either don't know or think it's going to stay the same. So that's actually quite a positive read in terms of economic outlook. Now let's take a look at where the administration is doing well and where they're doing poorly. What we found is 82% of the country think the administration is addressing education well. That's their top performing goal, and that's probably driven by the free education policy. Creating jobs, 72% of the country think that the government is creating jobs, or the government's performance is good in job creation. Obviously, that's probably driven by the fact that the hiring of teachers and nurses, that probably played a factor in it. And the fact that you are seeing some hiring happening, especially in the northwestern part of the country, obviously with preparation of investment coming in. Fighting corruption, 61% of the country believe the government is doing a good job fighting corruption, and reducing crime, 60% of the country. Where is the government failing, according to the people's views? Price stability, 20% of the country believe that the government is failing at price stability. 20% of the country believe the government is doing well at price stability. 79% believe they're failing at price stability. 65% of the country believe the government is failing at maintaining roads and bridges. And 61% of the country believes the government is failing at narrowing income gaps in the country. So inequality, they're not addressing inequality well enough, and they're worried about that. So these are areas for them to start working on. And quite interesting data. Vernon, what are your thoughts on that data itself? Oh, sorry. Yeah. I think we do need to, I don't know if we still do, we do need to take a very quick break just for a few seconds. And as we get into the next segment.
All right, pretty much.
Right. So, welcome back to our final leg of the discussion. Thank you very much to everybody who is still with us. But then, quickly before we get into the 5 minutes, the last few minutes where we go into the wealth matrix, what are your thoughts on some of those, on some of that data regarding the performance of the country and where we stand? Just in about a minute or so.
Yeah, I think it all trickles down to what the people also understand about the entire conversations. If we are in a place where we are quite ambiguous and where we have a vague idea or picture of what the country looks like and where we're going. Just actually yesterday I was talking to one of the individuals, from an NGO, and they're doing, things regarding, governance checks and, policy issues. And, one of the things that he said he's excited to know that the IMF is actually promising to give us more money, and that chunk of money, they feel like they're going to channel it into proper development and things like that. But like I earlier mentioned, I'm looking at the cost.
No, I'm
at
sorry.
which
I'm
these
laughing
money.
because I've never known people to use money given to them well. I'm sorry. I've never known people to use free money correctly. I'm just saying.
That of course is my thought. Do you understand the repercussions of borrowing more money from people who you already are owing? You said yes. I think that way the economy will be more stable, and it gives me a sign that more people think in that particular context. Not of course to tone down the idea that having more money to stabilize the economy is good, but then you have to strategically play around it, especially on the implementation on why you're borrowing those monies and to where you're going to place those monies at. Sometimes it will be better to get the money and invest it in international stocks better than channeling it into local development in this particular context, seeing the history of how we handle public funds. So I felt people need to take more time, understand what the bailout package is talking about, understand what the IMF says, and contracts and terms and conditions come with those huge chunks of money that they're willing to. Now imagine they have left all of these African countries and selectively come to Zambia and say, we want to work with you closely and monitor how you're going to be spending our monies. It should ring in your mind, saying that there should be something we should be careful about here. Otherwise, we'll find ourselves in more, dire situations and more severe circumstances that we were before. So I feel Zambians should be able to understand what we're getting involved into, because whatever debt will incur in the long term, we the people will have to pay back part of that. We'll have to contribute towards that. Speaking to former Vice President Mr. Neves Mumba, he alluded on similar issues. Talking about how we will pay back the debt at a time when we know PFs have left so much debt in our hands. He said, if we allow our leaders borrow, it is us, the people, still to remain in that debt, and also our image on international scale, becomes dented on how we're handling and servicing these debts. Defaulting was not really a good thing on our image as a country. And today, trust me, there are investors who actually derailed from actually, engaging Zambia into more, economic, activities due to that defaulting. And so I feel with more debt coming on our hand, we should be very cautious of how we're going to apply it if we're going to, get those chunks of monies, and how we're going to strategically pay back that money and every other money that we're owing. Already, we have government institutions on a local level, on an African level scale, owing monies to other companies within the country and outside, the country in Africa. So it has a lot to do with all of that. And at the end of the day, more money should help us get ourselves in an independent state and not get us in a worse situation than we are before.
Yeah, Venon, you're speaking with logic. Money has a way to strip away a human being's logic senses. I'm telling you, it has that way. But we will touch on that conversation. That is a fair point, Venon. That actually is a fair point. Now let's get quickly into the wealth matrix quickly as we talk about the final years of a person's life on what they should be investing in. And this one's really brief. From the years of 50 onwards, you should be looking at having a portfolio. You at this point, we should be talking about financial security. If you've been handling this investment journey very well, from the age of 20 or 30, you should be talking about the fact that you've accumulated now over 1 million or 2 million or getting towards 2 million kwacha. We should be talking about transitioning from financial security to at least financial independence, if not passing financial independence and heading towards financial freedom. So remember, you have to go security, independence, freedom, because security protects you from your needs being taken from your. It gives you the ability to serve your needs. Independence means your needs and wants can be taken care of by your passive income, while full-blown freedom means your wants, your needs, your aspirations, your money can do anything for you now. And therefore, you don't really have to allocate your time towards work in order to be able to get to live the life you want. So the first thing is, I would expect a person, worst case scenario, to be talking about how to be financially protected. We're talking about 500,000 kwacha in financial assets. Worst case scenario, your pension should have accumulated to that if you've been working in some way, shape, or form. Your assets should have been. We should be talking about the fact that you are financially protected for at least 5 years. Okay, and then you should be working. And if you are at financial protection, you should be basing yourself to work until you're 65. I'm sorry, you shouldn't be talking about, no, I want to leave the workforce early. No, you don't. You haven't done enough of the work to do that, unless you live a much lower key life. Unless you're one of those people who lives on very meager resources, we shouldn't even be talking about you trying to exit the workforce before 65. I'm just being honest with you. If you've gotten to financial security, then you can target at 50 to say, you know what, then I can try and work this out. Because your investing power at 50, is that a case, Vernon, where when you got 15 years remaining to invest, your money will do half the work and interest will do half the work. So you really have to push yourself to at least retire financially secure, if not financially independent. The target for everybody should be to retire financially independent, where you can have your wants and your needs taken care of, and you can do a bit of retirement work or post-retirement work, lecturing, consulting a bit here and there, maybe in politics, so that you are now just using that money to take care of your aspirations in your 60s. So here's what you should be doing. You should be testing the retirement plan soundness during this period. Your retirement plan should be sound. You should have a well-diversified portfolio. Your asset location is very important to protect from risk. You should be assessing risk rewards. And at this point, you are not taking any major risks. Okay, you don't need to be careless. These are your last flogs with your major money. Okay, so what you should be having now in terms of your time allocation is you need to have a detailed plan of your retirement in terms of what you're going to do. Vernon, a lot of people make this mistake. They think retirement is just sitting down. The biggest mistake you can make is not to have anything to do in retirement, because, Vernon, human beings spend more money when they've got less to do. I'm being honest with you. When a person has got nothing to do, they instinctively consume money. So you are either going to do one of things. You're either going to produce money by actually doing some productive work, or at least doing something productive in society, or you're going to consume money. And the less work hours you give yourself, the more. The point of retirement is not to stop working. It's to start working on things you find meaningful. Okay, to have enough financial independence that now you can set your time on things that you find meaningful, rather than just chasing after things. So that is the purpose of retirement. If you do retire and you've got nothing to do and you're sitting on a porch, you're going to vacuum through money very fast. You're going to just keep going to the shops and buying, because money is in the bank, and then you're going to keep spending it. That's where the problems are going to come. So you need to structure, what are you going to do in retirement? Plan your retirement. And tomorrow, Vernon, we're going to talk about the 10 commandments of a good retirement, just for everybody. Know your financial independence number. I've structured it somewhere around 3 million kwacha. But financial independence simply means, what are your needs, which should be about 50% of your budget, and then maybe a bit of your wants, then some of your aspirations are for financial freedom. And what are you retiring into? Find something you can professionally do full time. Are you going to run a little B&B? Are you going to tend to your garden? What is going to consume the 8 hours that work used to consume? Now, when you're looking at your money, asset location, because of tax, you don't want a situation where your money is heavily taxed. So whatever it's sitting in, make sure it's got minimal tax, because now you're very sensitive to that. Balance the risk of your retirement. At this point, you are exiting the growth parts of the stock market. You are not holding land for speculative purposes. Whatever property you own is a plot of land with a flat on it with someone in it, okay, and paying you rent. You are not speculating on land ownership in your time. You are not speculating on cryptocurrency in your 50s and 60s. You are not speculating. Remove all speculation from your portfolio and stick to cash flow generation. The stock market should be dividend paying stocks. Bonds should be able to pay you coupons and be able to fight off inflation, and your property should be paying you rent. That's it. At this point, cut it all off. Okay? You're now focusing on doing a cash flow. Switch to fixed income heavily. Finally, things you should watch out for: speculative assets are high risk. Inflation protect your portfolio, meaning I would advise people to sit somewhere below the 7-year bond so that you are inflation protected, and those renewals can help you with inflation protection. Private equity, those kind of things, workplace equity, unless you're going to continue working and it's your own business. But if you're an employee and you got stocks in your company, you really want to exit those positions as well and avoid too much cash. Cash, you will spend it fast and it'll get eaten by inflation. Those are the two biggest risks with cash. Whenever you've got piles of cash around, you are tempted to spend like crazy. So you want to put it into fixed income assets or reliable income generating assets. And at this point, the other thing you want to try and avoid is not understanding the age appropriate asset allocation. Holding heavy amounts of stocks in your 50s and 60s is dangerous. This is where your life is supposed to end. So even if you're 20, 30, 40, this is what retirement is supposed to look like. Okay, so you know what you're building towards whenever you're getting there, and not implementing risk reduction. You do not have risk capacity in your 50s and 60s. You don't. So you've got to start reducing it and down to the bare minimum where fixed income needs to be your friend. So you need to remove what are the currency risks you're dealing with, what are the business risks you're dealing with, market risks, any major risks, you need to cut them down. And this is your investment planning in your 50s. So if you're 40, you need to be preparing for this. If you're 50, you need to be doing this. Okay? And the point is, we all have to try and get as many people to financial independence with assets they can hand over, and they have trained to as many people as possible. Tomorrow, Vernon, I'm going to talk about the 10 commandments of a good retirement. And we're going to start a session, Vernon, on the levels of wealth and what that means by each age category, starting with age 20.
Why do you have to call them commandments?
They are commandments, my friend. Commandments.
Okay? People actually relate that to, some sort of biblical context.
Yes, I'm giving you the Bible of money. That's what I'm giving you, people. The Bible of I'm financial advisor. I'm going to give you the Bible of money. Cheers, Papa.
All right. We appreciate really Mthwale for having this session with us once again today.
Thanks a lot, my man. Have a good day.